Hello, my name is Craig Earlham, Senior Market Analyst at Oanda. Today we're going to talk about the Kiwi dollar versus the US dollar. We've seen a nice trend form in this over the past couple of months. It's resumed its downtrend. We did see a little bit of a peak in the Kiwi dollar prior to this. Following that initial massive downtrend, we did see it come back around 50% of the way. But in this point, this is where the Fibonacci levels really did just come into play and provide a ceiling for price action on a number of occasions. Since then, we've started to retrace low again. We've taken previous lows out, and now we're moving in this nice downward channel. Now, this has stemmed from a number of things. One of which relates to the Kiwi dollar and another the US dollar, where the trends working against each other creates this really nice downtrend that we're seeing in the charts right now. The RBNZ, the central bank in New Zealand, last week cut interest rates on the back of a slower global growth and a slower domestic growth as well. The outlook, of course, has become very clouded here, which is what has led to the central bank to cut interest rates to record lows. In the US, on the other hand, we are continuing to see dollar support. And the reason, again, for this is while the US central bank has also paused its interest rate hikes and the economy has shown signs of potentially slowing, other central banks and other economies still are viewed as being more vulnerable. So the dollar has continued to trade near its recent peak, while others have continued to suffer. Now, we've seen this continue again today. So while we were threatening to break out the upside of that channel, we have seen the US dollar find a little bit of support once again today. Risk appetite improving slightly, benefiting the US dollar in this sense. Over the last few days, the dollar association with risk appetite has been called into question because of this conflict again with China, the potential impact for the US economy and for US monetary policy, potentially again interest rate cuts, but that little bit of return of risk appetite providing some support for the greenback once again. Where this leaves us with the chart is we're trading around 65.50 at this moment in time. The notable levels are pretty clear on the chart, to be quite honest. We've got the previous lows around that 65 level. A break below here continues the trend of lower highs and lower lows. The interesting thing to note here, though, of course, is those momentum indicators at the bottom suggest that the last couple of times we've made a new low, the momentum indicators have failed to confirm it. This kind of divergence is potentially a signal of a weakening trend. So we're looking at those previous lows now below 65, and the next one comes just above 64. If we continue to see this trend form, then this is an area where we could potentially see the pair starting to bottom, of course, assuming something doesn't change. To the upside, again, that 65.50 to 66 range is where we'd potentially see a break of that downward channel. Now, of course, the further we move down the channel, those levels will move. But given that we've traded so tightly within that channel up until this period, a break of that channel could be a sign that we are seeing a correction to the upside. Not necessarily a reversal to the upside, but at least a corrective move to the upside, at which point 65, 66 and 67 again, having previously been notable levels of support and resistance, once again come into focus. I think 67 is the really key one here, though, given the fact that this would represent a corrective move from the recent peaks in the Kiwi dollar pair to the recent lows. But of course, these pairs do tend to find resistance and support along the way. So 65, 66 equally is areas where we could potentially see that occur. Again, 67 though still remains key for me to the upside, assuming of course we do see a break through that channel. But at this moment in time, the trend remains lower. We are heading lower once again today, but keep a keen eye on those momentum indicators.